So this was pretty well flagged. Netflix had been warning about it for a long time, and it's not surprising given what they call the COVID pull forward effect, right?
Yeah, exactly. They saw such immense growth in the first quarter of 2020 when the pandemic first hit countries like the United States, that they were warning growth would slow. It's just that no one expected it to slow by this much. They reported 3.8 or 3.98 million new users in the first quarter, below their own forecast of 6 million. Part of it is that they ran out of things to attract new users. You know, a lot of production was put on hold in markets like North America, meaning they didn't have new shows ready in time for the first quarter. You were just talking about India with Mark Cudmore. In India, production is still on hold, and Asia generally is Netflix's second fastest growing market. They're not able to make new shows for those markets. So in the short term, this is kind of here to stay. Longer term, Netflix painted a more positive picture where user growth returns and the content pipeline is more intact. But if you look at the other stocks that reacted in after hours as well, those stay-at-home stocks, it's simply that the COVID boost is gone. You know, the feel-good factor from when the pandemic first hit with these stay-at-home stocks is now dissipating.
So, Ed, when it comes to Netflix, they maintain that their business is still healthy. And we actually saw them announcing buybacks. What do we know about the fundamentals?
Yeah, it's interesting because it seems like alarm bells, you know, in terms of the performance of new subscribers, this fixation on subscriber growth. The financials are the best and strongest they've been in the company's history. Revenue grew by 24% in the quarter. They expect to break even on cash this year. Cash flow returns to positive territory next year. They've really shored up their balance sheet. They've managed debt well. All the things that any other company, you know, you'd fixate on during an earnings call. But this is different. You know, Netflix was such steady growth for a number of years, then parabolic growth during that pandemic year. It's hard to double down on those. There was also a lot of attention on competition. You know, this was a quarter where Disney Plus really took off in a number of markets. Viacom CBS brought a product to market. Discovery Plus came to market. And Netflix really was, they came out with fighting talk that competition was not a factor in slowing growth, nor was pricing. Because the other thing is that Netflix is more expensive than these competitors, and they were very quick to push back on that and say, well, look at our competitors. Those are promotional prices. These aren't the prices they'll have long term. But yes, top and bottom line growth, pretty good.